Real estate investing is one of the best ways to build wealth and financial security. If you've owned any property for the past several years, you've probably seen its value go up and watched your equity grow. So with investment property, you're able to multiply that value. I want to share with you the top 5 investment strategies that are trending right now so you can maximize your profits and minimize your risk in the ever-changing real estate market. I'm Ken Tyndall. I'm a real estate agent in Florida, and I've owned investment properties virtually my entire adult life since I was in my early 20s. If you're new to the channel and you want to learn about real estate, be sure to subscribe, like this video, and hit the bell so you won't miss anything. It does help the channel. So I'm sure you know that real estate can be a great investment. When I got started, I learned a lot from others, read some books, and learned from mistakes. Wish I had YouTube back then. Now be sure to watch all the way through so you don't miss the investment strategy that's just right for you. So let's dive into the top 5 real estate investment strategies that are trending right now. First, house hacking. And this is a good way to get started with little experience and a limited budget. Basically, house hacking is taking a property and making it your home and an investment property at the same time. One of the best ways to do this is with a duplex or triplex or any kind of multifamily property. You live in one unit and rent out the others. This also works if you have a guest house or a basement with a separate entrance, or I guess even renting out extra rooms in your house. I did this long ago and the extra income is great. You might even get to the point where you're living for free. The tenants help pay the mortgage and other expenses, and you start building your wealth. And one of the best things about house hacking is you get better terms on your mortgage to start with, including a smaller down payment and lower interest rates, especially with FHA or VA loans. And if you decide to move to another property, you can keep that multifamily home as a total rental property so you can continue to generate more income and build wealth. The next trending strategy for real estate investing is live in, then rent. I love this strategy. This is different from house hacking. Basically, you buy a house and make it your home. You live there, maybe make some cosmetic improvements, maybe not. But going in, you need to make sure it would make a good rental property. The numbers need to work. What you pay for the property, your monthly expenses, including mortgage, taxes, and insurance, and all that. Best part about the live in, then rent strategy is you get good long-term financing. And then when you move out and make it a rental, you still have that good financing, again, lower down payment, better mortgage interest rate. You get much better terms compared with buying a rental property right off the bat as a real estate investor. I used the live-in then rent strategy long ago when I had more flexibility to move a lot. I bought, rented, and at one point even moved in with some friends for a while until I bought something else. The next trending strategy is live in, then flip. I did this before too. Just like live in, then rent. You get all the financing advantages, the lower down payment and the lower interest rates, but you go into it with a different plan. Unlike a regular flip, you live there while it's being renovated. And this method comes with a lot less pressure than doing a regular flip. You can take your time, do one project at a time, and spread out the cost. But you need to stick to your budget and not be tempted to over-renovate just because you're living there. And since you're living there, you'll have less overhead and lower carrying costs. That'll help you with your profit margin. The numbers still need to make sense, and you need to make sure there's going to be a profit when it comes time to sell. The property can be sort of a fixer-upper, or in my case, I found a house in a great, desirable location with good bones and all that. I was actually showing it to a number of clients, potential buyers, and they all thought it was an awful house. The price was a bargain, but it was dated. It needed a new coat of paint in every room. It had old curtains, and the floors were ugly, and the light fixtures were old. I told so many people that it was a great deal. It just mainly needed cosmetic upgrades. But nobody wanted it. So I thought about what I was telling everybody else, and it made sense. So I bought it myself. I got some of the work done before I moved in, but spent the next year plus living there and doing a lot of the upgrades myself. When it was ready to sell, I made a great profit. Some of it thanks to what's known as sweat equity in real estate, that work you put into it. I made a video all about sweat equity. You should watch it. I'll put a link down in the description. Also, hopefully, when you do all this, the property is also increasing in value anyway over the time you're living there and renovating. And another thing that's great about this strategy is the tax advantage. since it'll be your primary residence, if you stay there 2 years, you can sell the house and probably not pay any capital gains tax up to $250,000 for an individual, or up to $500,000 if you're a married couple filing jointly. Now, I'm not a tax advisor, so be sure to check with your tax professional for your personal situation. Also trending right now is the Burr strategy. Now, Burr does not mean you're cold in this case. This is a great way to build a good-sized real estate portfolio in a relatively short period of time. Burr stands for buy, rehab, rent, refinance, repeat. Basically, you buy a distressed property at a bargain price well below its real value. Then you rehab the property. You do whatever renovations are needed to make it attractive to tenants. Then you rent it out. Again, the numbers need to make sense going in so you can collect rent, hopefully cover your mortgage, taxes, insurance, and everything, and make some extra profit. And hopefully the value of the property has gone up substantially to the full value. Going in, you need to calculate the ARV, the after repair value. But after the property is rented, then you refinance, and hopefully you can regain most or even all of the money you used to buy and fix up the property. And finally, you repeat the process. You buy another rental property with the profits. Plus, you have that rental income. And that passive income should keep coming in for years to come, and you build equity over the years. The last investment strategy we want to talk about is the joint venture. In a nutshell, a joint venture in real estate is when two or more investors pool their resources, their skills, their knowledge, their money to invest in a real estate project. If you do this, you should have a legal written joint venture agreement to outline everybody's responsibilities and expectations and so on. A lot of times you'll have one person with the finances and another person with the know-how, whether it's rehab and repairs or experience with rental properties. So for example, one investor might find a great deal and have the experience to manage it, but might not have the funding to make that happen. That's when somebody else comes in with the money or the ability to get financing to complete the deal. A joint venture has some benefits over what's known as a partnership because each party keeps a separate legal entity and can sort of limit each party's involvement. Also keep in mind, if there's a disagreement, you won't have total control over decision making, and while you're sharing expenses, you'll also have less equity and less profit. But whatever strategy you decide is best for you, hopefully you can build a real estate investment portfolio and then maybe at some point do what's known as a debt snowball. That's when you have several rental properties and use all the excess income from all of the properties to pay extra on one mortgage at a time until it's paid off, and then tackle the next mortgage and so on until all of your mortgages are paid off. And then you have no mortgage debt and ongoing passive income from rent. It's great. Well, good luck building your real estate empire. Hope you'll subscribe to this channel for more information about real estate, and be sure to check out this video.